You're listening to Sound Money from Casey Research.
Hello and welcome to the Sound Money Show from Casey Research with me, your host, Andy Duncan. It's my pleasure today to be speaking to Frank Suess, CEO and Chairman of the Swiss-based BFI Consulting and BFI Capital Group. Today we'll be talking about currency devaluation, the future of the euro, as well as BFI itself, annuities, life insurance, and if we can squeeze it in, we might just get Basel III in there as well. Guten Abend, Frank.
Hi, Andy. Nice to be here. Thank you.
Okay, now, with the recent confirmation of Janet Yellen in the Fed chair, we appear to be in a world with two opposing forces. The market wants to deflate and get rid of all the malinvestments of the last 20 years, and the monetary socialists in the central banks want to prevent this deflation with monetary inflation. Who do you think is going to win, the market or the central banks?
Well, it seems like, if you watch markets these days, it almost seems like the central banks are the markets. But, for several decades now, central banks around the world, with the U.S. Federal Reserve really in the lead, haven't really allowed business and credit cycles to happen anymore. And they've been fighting every sign of recession with more money, the result being found in that race to the bottom of world currencies. And the ugly side effect, obviously, is the huge debt and deficit problems we're facing today. And who's going to win? I think ultimately it's going to be very difficult to get out of this nicely and painlessly. I think we're really headed for ultimately some difficult times, despite the recovery story that everyone seems to be telling at this point.
Now, although in the words of Peter Schiff, it's a race to the bottom, which of the major currencies do you see as being devalued the most against the rest?
It's, right now what you're seeing really is you see world currencies, obviously with the large, major currencies, the US dollar, the euro, the yen, the British pound, they're really kind of shuffling each other down in a seesaw pattern. And because of, if you look at volumes in currency markets, those are really vastly the biggest currencies out there. And so really with the U.S. dollar in the lead, wherever they go, it seems everyone else, kind of has to follow. If you look at what, what's been going on, for example, with the yen over the past year, it's lost over 20% versus the dollar. And this, again, currently is putting a lot of pressure, obviously, on currencies across Asia. But, we're now seeing huge capital outflows due to that from many countries in Asia. And that creates investment opportunities. You can invest in the Japanese stock market. It's been going up nicely right now as long as you hedge against the yen on the downside. But ultimately, we're really witnessing the greatest financial market and currency manipulation, I think, of all times. And central banks are ultimately just suppressing interest rates across the yield curve with a seemingly endless money supply. And, if you ask me which currencies are going to be devalued most considerably, I guess it's hard to find currencies that are not being devalued considerably. You just kind of have to take advantage if you want to invest, protect yourself or benefit in that seesaw pattern. Even, the Swiss franc or a currency like the Norwegian krona, even they are pulled into this, even though fundamentally those economies are still quite strong. Both those economies have budget surpluses. Switzerland was just again voted number one in terms of economic competitiveness by the World Economic Forum. Switzerland has, 3% unemployment. So really you see that, there's a bit of a delinkage of fundamental and fiscal strength, even in the strongest or fundamentally strongest currencies. And therefore, I think right now the large currencies with their debt problems and monetary expansion are pulling everyone down with them. So I would agree with Peter for sure, yeah.
Now, speaking of the Swiss franc, we saw a peg instituted by the Swiss National Bank between the euro and the Swiss franc. Do you think that this peg will hold if something really terrible happens in the EU, such as France kind of completely imploding?
Right. I think, sorry to be a bit nitpicky, but often the word peg is used, and actually it's a bit of a difference. It's a floor, so it's not a peg in a sense of, going in both directions, but it's a floor at 120. And they have been successfully defending that floor. It's at this point, I think the Swiss franc to the euro is about at 123, so it's a bit off. So they have a bit of air there. I think what they're going to do is exactly what we just discussed. While everyone kind of keeps going down, depreciating, devaluing, the Swiss central bank will kind of go along with that. If the euro really went into a steep fall and into a crisis, that's when I think that floor would break and they wouldn't go along. And then a Swiss franc, I think, together with some other currencies, would rapidly appreciate.
Now, you're in an island there in Zurich Canton in the middle of the Eurozone. Do you think the EU and the Euro will collapse, or it seems to be quite strong at the moment? Do you think it will retain this strength over the next 2 or 3 years?
Yeah, right now I guess the Europeans are a bit more assured of themselves. Things seem to be going quite well, but I don't know, in my view, not to sound too extreme, but the struggle over the euro really could reignite, I guess you could call it fragmentation in Europe. At some point, I don't really think it takes that much for the debt crisis in Europe to really kick back in. And investors, currently are hoping around the world that recovery story, which is being repeated like a mantra by central bankers, politicians, the mainstream media, is going to hold. But fundamentally, and in terms of fiscal health, Europe and most other Western nations aren't really in better shape than they were a few years back. So the future of the euro, I think, will maybe be destroyed to some degree by the political tensions that you can expect to rise once that recovery story ends and reality kicks back in. Then I think the euro, in my view, is anything but a blessing for the European Union, and I think it might actually produce the opposite of what they want.
And how do you think people then should protect themselves from such kind of failures of financial systems, including the dollar as well?
Yeah, that's a good question. I mean, I'm still in my view, I think, if you're talking about currencies, one currency that you need to consider that is not going to go down with the rest of the currencies just by the mere fact that it's limited is gold, for example. I think today, you need to protect yourself with real assets. At this point, I think it's important if you go into gold or silver, even that you're doing that with the allocated, segregated approach, not with the paper money approach. And I think there you definitely have to watch, not following mainstream too much and have a hedge in place. And that's where I think it's important, where I think gold can play a role also.
Okay. Now, moving on to BFI, the company you run, it's got lots of different bits and pieces. Can you tell our listeners how it's composed and what kind of major services you offer?
Sure. BFI Capital Group is a Swiss wealth management group. We've got a number of different service lines and companies. They're all pretty much focused on international diversification, with investment needs of international clients looking for preservation, protecting of their wealth overseas. Primarily, our services really focus on investment management. We have an SEC-registered investment advisor also in our group that focuses on management of assets for American clients. In that context, we also help clients finding the appropriate custodian banks and brokers and so on, and act as an independent asset manager investing their assets, both discretionarily and non-discretionarily. Then we offer also both, traditional investment strategies, but also something we call, traditional would be more like dynamic, balanced, conservative. Those are strategies that everyone kind of knows. But we also offer strategies that we call defensive strategies, and they're more geared toward a less optimistic view in the context of quantitative easing and so on. These strategies, for example, as we just discussed, we around 2003, we started increasingly allocating parts of our clients' portfolios toward gold, to some degree also silver, and today we do that almost entirely in form of physically allocated metals. In that context, in 2008, we also founded a company called Global Gold. I'm sure some of your listeners will be familiar with Global Gold. It's a Swiss-based firm today, one of the leading international precious metals firms, also offering storage in Switzerland, Hong Kong, and Singapore.
Now, we seem to be living in an age of permanently artificially low interest rates, which have sort of destroyed annuities and other such products. What do you think of those kinds of products and things like whole life insurance policies and so on?
Well, whole life insurance policies, are the really products. It's a broad range. If you're referring to the investment type, so annuities, let's say private placement annuity policies or private placement life insurance policies, those, I guess, offer clients to have a managed account kind of wrapped in an insurance policy. And there are benefits in that. For American clients in that context of wealth planning, next to trust foundations and the like, we do employ private placement life insurance and annuity structures quite a lot. For American taxpayers, I think who are interested in convenient offshore diversification and compliant income tax planning, it's really one of the last bastions out there, I think, and can be used quite well. It's not a panacea, and you have to know what you're doing, but I think it's still quite valid.
But you'd still be basing most things around a base of precious metals.
No, not necessarily. Really, what you can do is you can have. It depends on what your philosophy is, and over the past few years, actually, it's been good for an investment portfolio if you didn't just base everything in gold. So I'm not a gold bug. I just think gold should be part of your portfolio, especially as a part to hedge against the financial crisis that I think may be headed our way. But over the past few years, you've really been doing better also if you had quite a bit also in stocks and so on. And so diversified portfolio managed well, I think, that has a good performance. If you can package that in a structure like a private placement life insurance policy or a deferred variable annuity, there are some benefits to that. And for Americans in particular, there's benefits you find is, first of all, just one example is investment flexibility. For Americans, it's really difficult to invest in a lot of funds unless those funds are American funds. I don't know if you're familiar with PFIC rules, but there, you really have negative tax consequences if you don't invest the right way, and you can avoid that by using private placement life insurance or annuities properly. There's also, a lot of clients are looking for asset protection. There's very efficient inheritance. For example, you have beneficiary designations, benefits that go to your heirs separate of probate. Long-term planning is a big word. An insurance policy is a contract. So it's kind of, when you sign it into being, it's signed into the rules that exist at the time of signing the contract. Whereas entities like trusts and so on, you have to keep adjusting them as the rules develop. Tax efficiency, like I just mentioned. So it's a topic I think that is quite interesting. There's also some caveats. I think it's important when Americans, in particular, when they go overseas, they to look into those investments. They really have to make sure that they do it the right way. It has to be an insurance policy that is compliant in terms of U.S. rules. So you can't just go into some offshore insurance policy and think that you're going to gain from that tax-wise. It has to be a compliant policy. There's, you need to know of some of the rules like owner control rules, diversification rules, and so on. Then pricing, obviously you have to look into pricing. Generally, private placement policies should be much cheaper, much lower cost than the more retail type products. And I think it's important also. There's a lot of different policies or products out there, a lot of different insurance companies. So it's definitely valuable, if you have qualified advice of someone who's independent can help you kind of make the right choices.
Okay, speaking of financial crises, you're in Switzerland, the home of Basel and the Bank of International Settlements. Now, the Basel III initiative has been put in place by central banks to prevent another financial crisis. Do you think it will, or is it just another kind of fig leaf?
Yeah, I think it's another fig leaf. I like that term. To me, really, Basel III, if you look at some of the accounting rules that have been put in place, for example, the risk-adjusted, valuation of assets on the balance sheets of banks. You really, some of the banks today, they're basically saying that they now have 10, 11, 12% capital ratio, where in fact they're still very similar to what they had back, in 2008. So I think it's a bit of a farce. And the more you go into the detail, the more you really see that it's a fig leaf, in my view. So I wouldn't depend on Basel III for being able to prevent a crisis, for sure.
Yeah, if you play with the risk adjustment figures in a spreadsheet, you can make it do anything. Well, it's been great talking to you today, Frank. How can our listeners find out more about BFI?
Probably best thing is to go to our website, www.bficapital.com, and there you can, on that first page, you can either go to Global Gold or check out BFI Consulting, which is more the wealth planning arm, or BFI Wealth Management, which is our asset management firm.
Okay, thank you very much for your time today, Frank Suess.
Andy, thanks a lot. Take care.
Subscribe to Sound Money Radio on iTunes. You can also visit us at caseyresearch.com/sound-money, where you can subscribe to our mailing list and listen to our increasing catalogue of podcasts. If you enjoyed the show and learned something new, please tell your friends all about us to help us grow this podcast. I'd like to take this opportunity to thank Frank Suess for joining us today, and I'd also like to thank you very much for listening. Until next time, goodbye.